understand what the global forecast is looking like and what could it mean for growth projections going forward. We've got Katrina Ell, head of APAC economics at Moody's Analytics, joining in on the show right now. Katrina, good to have you on the show. Thank you so much for your time today. I first want to really understand what this tariff backflip now, both from US as well as China, could actually mean for global growth. While it's pretty much, take each day as it comes, I don't know how long this is going to actually settle in. But how do you think, the prospects for global growth are looking thus far?
So I think, global growth has been severely challenged this year by, just as you say, the heightened level of uncertainty and tariff chaos that has been thrown from the US side in particular, but also from China as well. Because what we find is that having highly uncertain economic conditions is not conducive for an improvement in household spending, nor is it conducive for businesses to want to invest. And so in these highly uncertain conditions, what we find is that households and businesses are acting really cautiously. And in that cautious environment, we will see slower growth projections this year, even if the aggressive tariff threats that have been lobbed don't actually come to pass. We need to understand that the uncertain economic conditions are particularly negative and pervasive for the global economy.
Right. Good morning, Katrina. This is Cheryl also joining in the conversation. And given the fact that you did say that this environment is pretty uncertain, given the fact that you have a new comments coming in from Donald Trump day in and day out with regards to the tariff, and you did say, yes, it will have a negative impact on the global growth. If you could help us understand, what are your growth projections when you talk about India as well as the rest of the world at this point in time then?
Yeah, so our growth forecast for India in our April baseline, and we did our April baseline in the first week of April, we forecast 6.1% for this year on a calendar year basis. So it's still a decent projection, but it is a little bit weaker than what we had previously expected if we weren't dealing in this kind of chaotic economic and geopolitical environment. So even though India is less affected from an export point of view, because exports are a smaller share of the economy compared to other parts of Asia, in particular Southeast Asia, India is still caught up, and we are seeing slightly weaker growth projections expected for this year.
All right. Hi, Katrina. This is Shrishti also joining in. But also help us understand that how do you see the bonds market going ahead? Because that was one of the key factors that really jolted the US market specifically. And the biggest culprit that was seen to be in the reports was actually Japan. Help us understand that how are you analyzing the situation given the fact that we have the policy decision of Bank of Japan coming in just a week now. So how do you see all these moving parts joining in and impacting the bond markets?
Yeah, it's an interesting, how financial markets have responded to this tariff chaos. And I think it was particularly surprising to see the fact that, the US is seen as a safe haven asset. And so when we did see the spike in bond yields, treasuries were suddenly not acting like a haven asset. And when we look deeper into what was actually driving that, it wasn't so much a sell-off from Japan or anything like that. It was more the fact that, the US is ground zero for causing a lot of the instability in trade relationships and trade policy. And so investors, rather than parking their money in a haven asset that's linked to the US, they are looking for other haven assets to, and so that's why we're seeing, for instance, gold prices have risen quite substantially, because they're not linked to a particular jurisdiction and certainly not linked to the US market, which is the source of a lot of this volatility. And so when it comes to policymaker decisions, we're seeing that central banks in Asia, but also globally, are treading incredibly carefully when it comes to how central banks can actually navigate through this highly uncertain time. And in some cases, they are able to actually try and shore up domestic demand a bit more to help insulate from the expected ructions in export performance this year, because we know that exports are going to have a more challenging year because global demand is going to be weaker. So central banks, where possible, are trying to insulate and shore up household consumption and business investment to try and help offset some of that offshore weakness. And so I think Bank of Japan, for instance, is treading incredibly carefully when it comes to gradually withdrawing their policy stimulus to make sure that they can try and provide that additional support to domestic-facing businesses in Japan where possible.
Yeah, interesting. And I guess all eyes, Katrina, now are on the Fed with all the pressure coming in from Trump to actually ease on rates. Let's see what Fed actually does. But since you've already talked about your India growth projections, tell me, what are the growth projections when it comes to the global growth? And are there any markets that you think will significantly underperform? Any economies where you see some silver lining coming in?
Yeah, it's a good question. And what I would start off by saying is that growth forecasts at this point are always come with a margin of error, but they do come, to be frank, with a higher margin of error at the moment, because as we've already said, I mean, that the tariff environment is highly volatile, and how aggressive the tariffs that have been threatened actually come to pass or not will heavily influence export performance and have a broader impact on GDP growth. And so what we see is the economies that are particularly vulnerable to this tariff chaos are those economies where exports make a larger share of the economy. And so in Asia, that really does capture Southeast Asia. Thinking here, economies like Vietnam and Singapore are particularly vulnerable, whereas other economies like India, even Australia, New Zealand, where exports aren't as large a share of the economy and not as large a driver, they're a bit more insulated. And that's where central banks do have a bit more breathing space to try and offset that weakness. But I think in terms of winners coming out of this trade war, it is genuinely difficult to find an economy that ultimately wins, because what we saw through Trump's first presidency is global growth does suffer when we have, China and the US in active loggerheads with each other, and we do see lower trade volumes, and we do see negative impacts on both consumer and business sentiment. And those negative, pervasive impacts do really have second round impacts on economies, even where exports are perhaps not as large a growth driver. And if we think about, say, the monetary policy implications of having weak household and consumer sentiment, what that means is that if central banks were actually to cut rates more aggressively, because households are more cautious, they're less likely to take advantage of that lower interest rate environment because of that cautiousness. And so we do see stimulus measures on the monetary side as being less potent than they otherwise would have been.
Point. Thank you so much for joining us, Katrina, to talk about the global scenario, what actually this entire Trump tariff tirade means actually when you talk about the global growth, the projections, as well as the interest rate cycle. Thank you so much for joining us this morning on ET Now. But it's going to be a very action-packed day.